Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. It's happening here on Channels Television. Well, here on the program, Ethiopia and the World Bank have signed 2 financing agreements worth $745 million. We'll also tell you on the program that the cost of shipping in Kenya is down by 50%. Unfortunately, because of weak shillings, businesses and households cannot enjoy of that gain. And also, the possible impact of Zambia's debt restructuring is what we'll be discussing on the program. Good afternoon and welcome. Let's head straight to the market and see how that's doing at intraday, starting from Nigeria, where it's negative, not looking very green at intraday. There you see the numbers there. The NGX is down by 1% at 52,225.86. We're hoping we're getting to that 53,000, but it seems we have to wait a little bit longer. South Africa is, however, in the green, 0.51% at intraday, 74,035.81. Looking at other markets there now, Egypt is even more in the red, more than 2%, 2.13%. Kenya closed Thursday in the positive, 0.40%, and that's for Kenya. Just one green in a week. I guess we have to work with what we have. We move to the Middle East now, where Abu Dhabi begins the market at intraday. It's down 0.37%. There you have it there. And Dubai is also down almost 1%, 0.80%. Looking at the UAE now, other parts of that region, Saudi Arabia is, however, doing good, 0.12%. And Qatar is in the red, 0.46%. Now, yesterday in South Africa was a rate cut day, but the good thing is that that rate cut is not as aggressive as was expected. It does look like that South Africa Central Bank and the monetary policy believe that there's a bit of recovery or the impact of past rate cuts having the desired effect. And so yesterday we did see a rate cut there, but not as aggressive as was expected, and the central bank governor tells us more.
Price forecast is slight as this year commences. High inflation and weak economic growth continue to shape global conditions. Russia's war in the Ukraine drags on, and recession risks remain elevated in the euro area, even though energy constraints have eased. In the second quarter of 2022, headline inflation breached the upper end of the target range and is forecast to remain above it until the second quarter of this year. Headline inflation is only expected to sustainably revert to the midpoint of the target range by the fourth quarter of 2024. Against this background, the MPC decided to increase the repurchase rate by 25 basis points to 7.25% per annum with effect from the 27th of January 2023. The SAP's forecast for global growth in 2023 is revised slightly lower to 1.6%. We expect better growth in 2024 at 2.6%.
All right, we head to the United States now, where stock futures fell slightly on Friday morning as investors close out a winning week for the markets that saw better than expected economic growth and a pop in the market's darling Tesla. Futures tied to the Dow Jones. So look at the numbers now. Futures tied to the Dow Jones in the red, 0.09% at 33,992. S&P 500 also in the red, 0.29% at 4,064, while Nasdaq still in the red, 0.5% exactly, 12,046.04. Well, we do have details of yesterday, that's Thursday's trading, and our correspondent in Washington, Maria Bird, gives us the details.
Great news for the U.S. stock market on Thursday, as the Dow Jones grew by 0.6%, the S&P 500 grew by 1.1%, and the heavy tech NASDAQ grew by 1.8%. This is all being attributed to the economy reports that came out by the White House. The U.S. president announced that the economy had a faster growth than expected in the fourth quarter. This could also have a major impact on the cooling of the inflation in the U.S. And the Federal Reserve could begin to pause on interest rate hikes. This is all having investors hopeful that the U.S. stock market will continue to grow in the days ahead.
All right, still looking at the markets now, we head to Asia. Stocks in the Asia Pacific traded higher on Friday as traders digested Tokyo's January core consumer prices that rose 4.3%. Looking at the numbers now, very much in the green for Asian markets. Nikkei 225 up 0.07% at 27,382.56. Shanghai Composite also looking very, very good. More than 0.5% at 0.76%. Hang Seng Index 0.54%, 22,688.90. Kospi also in the green, 0.62%, 2,484.02. And the X200 over Australia, 0.34% at more than 7,000. The green market for Asia this afternoon. Well, let's see what's happening with oil market now. Prices edged ahead for a second session on Friday, buoyed by stronger than expected U.S. economic growth and hopes of a rapid recovery in Chinese demand as COVID-19 cases and deaths plunged from last year's peak. Brent crude gained 30 cents to $87.77, and U.S. crude inventories rose 34 cents to $81.35 a barrel, and that's a 0.42% gain. Both benchmarks had gained more than 1% on Thursday. OPEC Plus delegates will meet next week to review crude production levels amid steady support for crude prices from strong demand for jet fuel and diesel. The U.S. Federal Reserve will decide on another rate hike as inflation cools and gross domestic product improves. Heading to the metals market now, gold prices were a little change on Friday as traders awaited U.S. inflation data, which is due later on today, to gauge the Federal Reserve's stance on further interest rate hikes. Spot gold was flat at $1,927.99 per ounce, while U.S. gold futures were off 0.1% at $1,928.30. Investors are now awaiting U.S. personal consumption expenditures data and the Fed's preferred inflation measure for cues on the central bank's path forward. Spot silver fell 0.2% to $23.86 per ounce, and platinum lost 0.4% to $1,013.88. Palladium also slipped 0.4% to $1,670.87. Both the metals were headed for a third straight week declines. All right, now let's see some of the developments going on in Africa. We'll start with what World Bank is doing with Ethiopia. The Ethiopian Ministry of Finance and the World Bank have signed two financing agreements amounting to a total of $745 million. That's approximately 39.9 billion Ethiopian currency, both in form of grants. The first grant agreement amounting to $445 million will finance implement a program for results as hybrid for strengthening primary health care services. And the second, which is $300 million, grant agreement will be used for the implementation of flood management projects. The program for results hybrid for strengthening primary health care services will be used to improve access to an equitable provision of high-quality primary health care services and to further strengthen the system. And in Kenya, it's supposed to be good news as freight costs in the shipping industry are falling by up to 50% in key trading routes. Shippers have reported and setting the ground for cheaper imports into Kenya and the region. This is after more than 1 year of high prices, which spiked in 2021 when global trade witnessed a vessel and container shortage in Africa and other low volume import-export regions. After a slowdown at the height of the COVID-19 pandemic in 2020, the following year saw a resumption of trade between China, Europe, and the United States, the world's largest producing and consuming economies. High demand for vessels in the market slowed down shipping lines activities in some regions, among them in East Africa. Let's head to Nigeria now, and we do know here in Nigeria, yesterday was one day for the CBN because they celebrated that, unveiled that card, the AfriGo card, which is a domestic card scheme for Nigerians to use. Let's see how that happened and some features of that card.
Nigeria appears to be leading again on the continent's financial ecosystem with the launch of the National Domestic Card Scheme known as AfriGo. An innovative payment solution to promote inclusion and cross-border payment. At a virtual event which has in attendance the leadership of the Central Bank, Nigeria Interbank Settlement System and Bankers Committee, CBN Governor Mr. Godwin Emefiele says the card will enhance flexibility for financial transactions.
This effort is not a quest to prevent international service providers from continuing to provide services in Nigeria. Rather, it is aimed at providing more options for domestic consumers whilst also promoting the delivery of services in a more innovative, cost-effective, and competitive manner. We have come up with this card to ensure that all card transactions, online transactions where you're using cards, will now, effective immediately, begin to go on the Nigerian National Domestic Card System.
Some of the features and benefits of AfriGo include acceptability, affordability, security, and data sovereignty. And Mr. Emefiele explains that existing bank cards are still valid.
All domestic card transactions that are going to be conducted in Nigeria will have to be through the Nigerian domestic cards. Your existing cards are fine. You can keep using them. But given that charges by foreign cards are in dollars, we will no longer pay dollars for those cards, for the charges on those cards. Particularly, we will only pay dollars for charges for transactions that are done with, whether I do this domestic card or foreign cards outside Nigeria.
The Apex Bank stresses that international transactions on AfriGo commences with immediate effect and will support the growth of a robust and inclusive digital economy within the Nigerian domestic market.
Well, I hope Nigerians are looking forward to that, the use of AfriGo, and hope that it will meet, the needs that the other bad cards perhaps could have beat. But anyway, let's take a break now on Business Incorporated. We do have more stories and conversation for you on the other side of the program. Do stay with us. Hey, welcome back to watching Business Incorporated here on Channels Television. Just before we head to Africa, let's stop over at Europe, where the euro continues to claw back last year's losses against the dollar, reaching a 9-month high while scrapping just under $1.09. And traders are looking ahead to next week's European Central Bank meeting. But they are also more bullish about the European economy. Well, help us to read in between the lines. We have Stephen Bursley now joining us from Berlin. Hi, Stephen. Good afternoon. So who is cheering on this stronger euro? What's driving it?
Yeah, as of Friday morning, that euro-dollar exchange rate holding at around $1.08, almost touching $1.09. That would put it at the highest rate since April of last year. Who's cheering this on? Well, anyone who's buying fossil fuels, frankly, here in Europe. Oil, gas, coal, all of that denominated in U.S. dollars. So pretty much everyone. Remember that those higher prices for those fossil fuels due in large part to the war and driving inflation, that's been worsened by this exchange rate. Otherwise, anyone who has dollar-denominated debt, that includes some households, but especially major businesses here. And otherwise, we know that European importers of American goods would be happy. They can buy more for their euro out of the U.S. Likewise, American exporters will be happy that they will be able to sell more to happy buyers. Those who will not be happy by this, anyone who is trying to appeal to American tourists here in Europe, they're going to get less for their dollar when they come here to Europe. And likewise, those who would benefit would be American businesses dealing with European tourists. Now, of course, this is a bit silly because the exchange rate is not so transformed. It's really only risen by a number of cents in recent months. But this is important to show that there is a dynamic that's taking place where the euro is clawing back a lot of those gains that it lost earlier in the year as there were so many concerns about the economy.
Yeah, but maybe we should take a little bit of some steps back and have a review of how the euro did. Why was it so difficult for it last year?
Yeah, there really are three main things that were driving what we saw develop between the euro and the dollar. First and foremost, of course, the war in Ukraine, I should say, and the energy crisis that it unleashed. There was so much uncertainty around what it would look like for European businesses and for European economies. A lot of talk here in Germany, especially as Russia threatened to and ultimately did dial down gas deliveries. A lot of talk here in Germany that many businesses would have to cease operations or at least scale them back dramatically, and that would really bite into the country's economy. And of course, Germany is Europe's largest economy, so that would then have a great toll on Europe itself. Another big driver of this was that there were rising global concerns about a recession, and that meant that there was more interest in the U.S. dollar as a safe haven currency, and that, of course, strengthened it in relation to the euro. The other thing is that, frankly, the U.S. Central Bank, the Federal Reserve, was much faster and much harder with its interest rate hikes, its tightening of monetary policy in response to inflation, and that caught some other central banks off guard, and that meant that there was more more bang for your buck, essentially, for a dollar than there was for other currencies. And so investors moved in that direction, leaving other currencies to go to the dollar. That strengthened the dollar's position vis-a-vis other currencies. Now, it's not just the euro that suffered, but many other currencies, the Japanese yen also standing out as one of the major currencies that also suffered because of a strong dollar. We've seen in recent months that that's starting to improve, especially as central banks catch up to the Federal Reserve and what it's done over the past year.
Yeah, thank you so much, Stephen. And of course, talking about the ECB, waiting for the decision by next week. Now let's come to Africa. U.S. Treasury Secretary Janet Yellen has been touring Africa. We told you about how she was in South Africa yesterday. Earlier in the week, she was in Zambia and made some observations, noting that it was critically important to restructure its debt. And she believes that progress could be made after their friend talked with China, which they owe about $6 billion. Now, let's have Matt Kinniger joining us now to help us see some of the implications of this restructuring. Matt, good afternoon. So tell us, what are the prospects of a successful debt structuring when we look at the situation in Zambia?
Hi, thanks for having me on the show today. So I would say the prospects for a debt restructuring imminently, so over the next 6 months or even the next year, are probably not very strong. The issue is that debt talks are being held up by Chinese demands to include foreigners who hold local currency bonds into the restructuring process. And at the moment, it's very unclear how long this process will last in terms of the negotiations. A resolution to this issue is not particularly likely to come in the first half of 2023, as negotiations so far seem to be quite rigid, actually, so not very much movement there. If the country does exit default, and if there is a sort of meaningful restructuring of its debt this year, it'll really be in the second half of this year. But again, there's no clear timeline, and in our view, it's actually much more likely to occur in 2024. So we're not really holding our breath at the moment. We don't think it's very imminent.
Well, not sounding good. But how does this issue of default and all of that affect their outlook for the year?
Yeah, so I mean, it does sound quite unlikely that Zambia's exit from default will happen this year. Having said that, the economy is still growing, and some sectors of the economy are doing relatively well. So we're forecasting growth of about 3% in 2023, which is not too bad considering the country is blocked out of international capital markets. There are a couple of things that will be driving growth. We are seeing quite strong investment into the mining industry. We've seen Canadian mining companies invest there. We're also, copper prices are very high at the moment. This is a very strong boost for exports and government revenues to an extent. Having said that, the country is facing quite severe power shortages at the moment, so that is affecting industrial productivity. And also, obviously, the default and the continued state of sovereign default does mean that public finances are very constrained. So government investment, government spending will also be very muted. The government will have very limited ability to kickstart the economy through spending and investment. So it will contain growth over the next year or so. But overall, considering how the country remains in default, we are still expecting it to grow, so not doing too badly. I
wonder how the kwacha will also look like.
Yeah, so it's a good question to ask because the kwacha's been through a bit of a difficult time recently, especially since the sort of end of Q3 last year. It's lost quite a lot of value against the dollar. This depreciation, in our view, likely signals investors' continued pessimism regarding the prospect of the country exiting its debt default, and it's all related to this difficulty in restructuring its debts. Our view is that the longer the country remains in default, the longer the kwacha will remain under pressure. Maybe we'll see some more depreciation. Our view is that the kwacha will remain quite volatile in 2023, and we are going to see it likely exceed 20 per dollar for the foreseeable future. There are other drivers as well. We are seeing generally a strong dollar, which is affecting all emerging market currencies, and this is being driven by quite a significant US Federal Reserve tightening. So really what we would need to see is a substantial set of progress made towards debt renegotiations and an exit from default before the kwacha stabilizes over the next year or so.
All right, Matt, thank you so much for giving us an eye on Zambia there. Enjoy your weekend.
Thank you. You as well.
So that's it on the program. Thank you so much for being a part of 5 days of going around the globe and the world, in the world of business. We'll do it again next week. I'm Ini John Mekwadu. Have a great weekend.